But while the stock market is taking off and things are looking pretty handsome financially right now, there are some stocks that you want to avoid and stocks you want to stay away from in this economy. So buckle up, seatbelt, get comfortable. We're going to get started on the Black Financial Channel right now. Hey, what's going on? Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I am your friendly neighborhood finance professor. On the Black Financial Channel, we talk about Black economics and Black wealth every day, sometimes as much as 10 times a day, under one condition. The condition is that we ask you to be Black first. Black first means that you put your community at the top of your priority list. Black first means that you want Black people to win. Black first means you love yourself as much or before you love everybody else. And that's what it is. That's what it's going to be. And that's how we operate. So if you agree with that philosophy, put a hashtag B and the number one in the chat, hashtag B1, that stands for Black First. Put that in the chat. Let us know that you're Black first. And that way we can continue to have a conversation, because I want to be Black first up in here. You ain't got to be Black, but you got to know why we exist. We exist because we're closing the racial wealth gap all by ourselves. So today I want to talk about a very quick topic on some stocks you do not want to own in this economy. Right now, some of your stocks are doing well. If you're making money right now in the market, type money in the chat. Put the word money in the chat if you're making money. If you're not making money, just write broke in the chat. If you're not getting money, put the word broke. If you're making money, put the word money in the chat. And I'm going to break some stuff down for you. Right after I'm done with this, I'm actually going on to drboycetv.com to interview a group of Black health experts like Nathaniel Jordan, the Minister of Wellness, my sister, Dr. Latanja Watkins, Dr. Charm, who is a health expert as well. We're going to talk about mind, body, and soul, healthy relationships, healthy bodies, and everything else. We're going to do this right after on drboycetv.com. All right, so I see some of you are getting money, some of you are not. Well, let me just tell you, I read this article today on Yahoo Finance about some stocks that are the worst stocks to own right now. And I'm going to tell you what some of those stocks are, and I'm also going to tell you why they're not good for this economy. Hit the thumbs up button, share, subscribe button if you haven't done it yet. They said, here's what they said. They said, not every sector of the market is a long-term buy, even with stocks continuing to go on autopilot, warned strategists at Goldman Sachs. Some of the worst stocks to own in the U.S. economy trying to claw back from the pandemic are those with high exposure to tight labor markets, which runs the risk of pressuring profit margins as wages are hiked. Quote, labor market tightness will remain a challenge during the next few years. Investors should avoid stocks with high labor costs relative to EBIT, earnings before interest and taxes. So companies that have high labor costs relative to interest and taxes are going to be hit hard by the labor shortage. The labor shortage is a very big deal right now in this market. A lot of the inflation that is occurring right now is happening because there's just a shortage of people that want to work. They've never had a situation where the unemployment rate was this high and there was an increase in wages. It just didn't make any sense. Like, wait a minute, there's a high unemployment rate, but we don't have anybody taking these jobs. So it's kind of become kind of a mess. I mean, a big part of the economy has kind of become a crap show. And I'm not going to say shit show because I don't want to cuss today. So it's kind of messy. Right. And this is a big risk factor for a lot of companies. Right now, some of your stocks that have gone down have probably been those large, what they call long duration stocks that have been hit by this high inflation driven by the labor market shortage. The big debate right now is whether or not that shortage is going to continue, whether or not it's going to last or if it's just transitory. So some of the companies that they list that you should not own right now because of their high labor costs, you ready, are IBM, Raytheon, HCA Healthcare, FedEx, and Dollar General. So maybe if you're making put option plays, maybe these are stocks that you might want to look at for put options. I'm not telling you to do it, but it seems to me that Goldman Sachs is saying, and nothing is certain, but they're saying IBM, Raytheon, HCA Healthcare, FedEx, and Dollar General are stocks you don't want to own. However, they said that they're reopening stocks tend to be the ones that look good in this environment. Is a quote, while virus counts are now rising and weighing on reopening stocks as the winter wave passes, declining virus and inflation headwinds should provide a near-term boost to corporate revenues and margins for the businesses most exposed to these challenges. A couple of companies they list are Best Buy, Home Depot, and Lowe's. So they say that these companies, Best Buy, Home Depot, and Lowe's, are poised to boost after the winter is over, after all the, because what's going to happen in the wintertime is that the number of COVID cases is going to rise The labor costs are going to continue to go up, but the COVID cases are going to go up, and you're going to have some fear from the pandemic, and inflation might continue. But they believe that this is all temporary. This is all going to start to decline in the spring, and in the spring, some of these companies like Home Depot and Lowe's are going to improve. Lennar is another one, ticker symbol LEN. So those are some stocks. So if you're looking at options plays or that for the short term, long term, whatever the case may be, these might be companies to look at. It's totally up to you. But avoid some of those stocks that I mentioned earlier when I talked about IBM, Raytheon, HCA Healthcare, FedEx, and Dollar General. So this is what's happening right now in the market. I've got to run. I'm about to go do this panel. By the way, if you want to see the stocks that I'm picking, actually, you can get a list of some of the stocks I like for this week for my own portfolio by going to boycewatkins.com. At the very top, there's a list of what Dr. Boyce is buying. There's also a 76% off on the Dr. Boyce stock options bundle, which will show you a lot of things you need to know about my 11-step method of how I add stocks to my portfolio. It was a 2-day, weekend-long conference that I did, and I recorded everything, and you can get access to all of that for life, and you get access to the stock options bundle, the mini class, as well as an economic survival plan that I laid out for you guys for 76% off. So feel free to go take a look at the Dr. Boyce bundle and all the other things we have for you at boycewatkins.com. All right, guys, I'm out of here. Please have a great day. I will talk to you guys soon. I'm going to go live on drboycetv.com to do the mind, body, and soul panel about how Black people can be healthy, wealthy, and strong. So I hope you'll join us over there. So God bless you. Have a good night. It was great talking to you. I'll talk to you soon. Bye-bye. Peace.